Pretty bullish situation right now on Wall Street, new highs for blue chips in the broader market. It is important to note that tech still is showing some leadership, even though we saw things broaden out a bit. Do you think this is sustainable? Are we going to continue to see more gains this year?
Well, yeah, look, we think certainly we're going to see more gains this year. Probably going to be tech-led, maybe not the tech that everybody's thinking about right now, but probably not the hardware tech part is going to lead, in terms of semiconductors. We're probably past the hardware part of the AI trade. We're probably moving into the more the services part, more the use case part of the AI trade. That's frankly going to be the more interesting part of that trade, we think. But it's also going to be broader, and it's going to be much more the market can participate in that kind of trade. And we think that's going to be probably the largest driver in 2024.
Okay. Despite these new highs, again, for the Dow and the S&P, you actually believe that Wall Street is having a vibes recession, or as you call it, a vibe session. So give us a sense. We got some big data reports out this week. You think there's a disconnect between the hard data and the soft data? This week we have PCE, we have GDP. We've got a lot to kind of weigh and chew on. What's going on with the vibe session? Do you think it continues after this week?
That may be starting to end. And by vibe session, this is not something that I necessarily came up with, but certainly something that I think describes what's going on in markets, going on in the economy for much of the last year. And all that means is that the way that people feel and the way that people have been answering surveys is very different from the reality of how they actually are in their real lives. I mean, we know that everybody's flush with cash. We know that balance sheets are in really good shape. But when they answer surveys, they are very, very almost despondent in the way they answer surveys. And so, we got the first, so basically, this divergence between sort of the soft data, the survey data, and like how I feel versus how I actually am.
Okay.
That divergence, we think, actually may be starting to close. We might have gotten our first inkling of that with the University of Michigan sentiment indexes released last week. If we get consumer confidence back up, that's going to be a big bull tailwind for the rest of this year. We might be getting there.
Scott, by the way, you're really kind. You're giving credit to somebody else for vibe session. I'm going to use it. I'm not going to give you any credit. I'm just going to act like I made it up. Just joking, really. Our JP Ong, he mentioned investors in Japan. I know it's something that you're looking at as well. You're actually looking at something a guest yesterday talked to us about, the fact that 50% or more of Japanese listed firms are considering restructuring to unlock a valuation discount. You're saying that makes Japan more attractive right now.
Yeah, and we think Japan is one of those things that is still under the radar after having a great year last year. People people my age, people who've been in this business 25, 30 years, we've never really gotten excited about Japan. There's never been anything to get excited about. They call it the old Widowmaker trade, being short JGBs from way back when. And so when you have something in Japan that is more structural from a corporate development standpoint and from a Western values inside of companies, creating shareholder value, caring about earnings, things that the Western companies sort of take for granted. Right. Japanese companies haven't always, and so that creation of more Western style values inside of Japanese firms could lead to a lot of equity value. And we think that story is just starting to get told right now.
So Scott, tell me, we asked a guest this yesterday. Are you saying play it by an ETF? Are there certain stocks that you look at? Are there certain sectors in Japan that you're especially bullish on? Just give us one or two.
Yeah, I mean, I think if we're talking about Japan, ETFs are probably the easiest way to play it. We mix it up between the currency hedge and the non-currency hedge, just so we don't have to take a strong position on what the BOJ or what the currency's doing. I just think you just want that broad-based Japanese exposure right now.